Good afternoon, all. CamelbackTrading.org coming to you this Friday afternoon, March 11th. I've been giving a lot of dates wrong lately. Sorry about that. March 11th, you're looking at market profiles, window trader of SPY, IWM and triple Qs. A very, very ugly close for the week for the bulls as SPY and ES go out with an outside day down after gapping higher. Triple Qs go out with an outside day down after gapping higher. More importantly for triple Qs, as you'll see, we're going to do the charts on all of these. They're only $5, $4 off of bad territory again. They keep knocking on that door, and at some point they're going to blow right through it. They go out triple Qs go out with a trend day, only one sentinel, and a price probe. Russell goes out with a price probe and two sets of singles, L, and they held B all day. It was actually looking like a B shape for us as we failed twice to have singles hold, yet SPY and ES end up with a price probe and a trend day down in L and an afternoon rally high in I. But believe it or not, our value was overlapping a higher all day. So was Russell's, even though they were trend all day from B period. Volume was only 90 million on the tape so far. So it's tough to read what transpired here. I know what happened this morning with, again, mindless machines and momentum buys getting absolutely destroyed at the highs of the pre-market. Really, really distorted things. I was green today, and I don't think I saw the market well, especially in the afternoon as it continued to pull back. I thought at one point, especially when we had gotten POC up to H's high, that might be all the damage they want to do and have a nice B shape and keep POC up there. We didn't even we only ended 7 wide. We went back down for that at G's high, and then we absolutely just gave it up late in the day, but not a lot of heavy volume. But it was another day where I probably should have taken some really big advantage, and I didn't. But that's okay. I did a lot of trades. I'll go over them quickly. I took a long in A against the price probe from yesterday. So when we pulled back in A the first time and filled the gap, I took a long the 425 calls, and that worked out. Then when B took out A's low, I'm not really sure if we're ready to go trend down. I actually took a long against value high from yesterday, 423s, and I got paid on those. I lost on my next two trades. I actually lost on a short in C. I didn't think we'd get back, and fill the single prints and get back above yesterday's high. We did. Took it off for a loss. Those were the 427s. And then in D period, I actually lost on a long. When on the 426s, I took it when they stopped one time framing down. Thought they'd get more of a push. At the time, it's now B I'm using as a highest accepted price. Although the fact that C and D came so close to it is mind-numbing. Now, I started along probably right around here where my cursor is. Very not big. Came in, went up, I took some off. But silly me, I held it the whole way and added at the lows of D, and it went back up. So when I took it off, it was not a big loss whatsoever. But the reason for the trade really wasn't there. I really thought we were going to pop B and C's high and not have a highest accepted price. But boy was I wrong, as that held tremendously. So I lost on those two. Then I took a short in E, did well on that, 427s. Took a really nice short in F. When F rallied up while I was eating lunch, right before it filled the single prints, took a nice size, and it rolled back over and paid me really good. So by those two trades on E and F shorts, put me back in the green really nicely. Then I took a long in F against the overnight low, and that paid 423s after I got out of my short. G period was shorting because we're one time framing down, 425s. H period, I thought we were going to stop. Again, we couldn't hold any single prints. I'm like, these shorts are going to give it up. I innovated before we took out G's high and bought the 423s and got nice on that. So I was doing well there. I was looking for a decent size short in I. Now remember, at the time, if you can remember, if you were looking, half back was all the way up here. Value high was right above it. I'm like, I'll start a short at half back, which is right around yesterday's high, and I would add decent size at value high at the time. Well, guess what? It didn't get there, and then boom, just automatically. Talk about a reversal. I just really, but it didn't rip down on huge volume. It came in, but not on huge volume. So it really still had me kind of perplexed as to whether we were just going to go down and then go back up and keep POC up here. Obviously not. We could never get back up. I didn't do anything in J and K. K would have been a beautiful short against J's high since we were one time framing down. Didn't do it. Actually took two small longs. L, because there was no tempo. Very small one got paid. And M, the first time it got to value low, I got a pop on it, and that's it. I was looking for shorts on pops up, but the later it got in the day and the more short it got, I'm like, I don't want to take a short, and then they decide to run it up in my face late in M period. Plus, I wasn't sure if we were going to have an outside day down, but we did. So, again, very bearish finish, outside day down for ES, SPY, Q, and NQ, and Russell just missed. Now, as far as destinations, first one will be L's low, which is our price probe of 421.95. Then we have 421.96, our single prints. They go from M's high and get filled at K's low at 422.61, so they're 65 cents. Afternoon rally high, I, 425.52. Our our highest accepted price, which is B's high, at 427.19. And then we have today's high of 428.77. For the downside, now you talk about a treacherous landscape for the buyers. There's a lot of stuff here now sellers have to lean on, right? Look at the downside destination points. We have today's low of 419.53. Then we don't have anything until the weekly low of 415.12. That's almost $4.50 lower. And below that, we don't have anything to 410.64, which is our monthly low and our yearly low. So after an outside day down, if this market does decide to have a follow through on Monday, it won't take much effort to get to the yearly low. And especially for triple Qs, where their outside day down could lead to them being put back into bear territory. So keep that in mind as we go. Now, we do have the Fed next Wednesday, so we might want to stay in this pretty large balance we're in, and we'll go over all the balances when we do the charts. But just keep that in mind for next week and Monday. So let's start with Russell. So Russell's monthly is down. Now, again, remember last month we barely took out the previous month's low, but we did. And the question was this a look below and fail? Well, because it's a monthly, we're not going to know. The only way I would consider it being a look below and fail is if we take out last month's high at some point, then we should maybe go and get some legs to January's high. If we can't, nothing's written in stone yet. So it's another, basically you could treat last month as an inside month, and so far 10 days in, we have another inside month. But it is down and one-time framing down. You want to call it down to balance, be my guest. But until they take out last month's high, they still have issues, even though it looks like it could possibly be a look below and fail. Look at the weekly. Want to talk about indecision? 1, 2, 3, 4, 5. We have a 7-week balance. The top of it is 209.05. The bottom of it is 187.92. So 188 to 209. So it's a $21 7-week balance. Right? Market imbalance is waiting for more MGI. And look at the daily. Balance. It's a 3-day balance. firmly a 3-day balance. So the monthly is down to balance, weekly balance, daily balance. So Russell's acting better than some of us, right? Believe it or not. Triple Q's monthly firmly down so far an inside month, but it is down. Weekly, 3-week balance. Now last 3 weeks ago's low is important, 318.26, but well, then again, this week's low is important. If we take out this week's low, you'll be in bad territory, and I'm going to say it's going to be pretty interesting if we come out of this 3-week balance to the downside. If we do, you have a small area at 316, which I don't think would hold, and then 297 would be your next best big level. So monthly is down, weekly balance, and the daily is balance, 4 days. And then let's go, and don't forget, we had an outside day down where we took out yesterday's high and closed below yesterday's low. That's after gapping higher, folks, and we're the same. So here's SPY, sorry. SPY is also down in the monthly. Inside month so far, but it's a monthly, so we don't know, so it's still down. Weekly, 3-week balance, just like triple Q's. But the big thing is we're nowhere near bear territory. We have to get to 384, I think I said. So, we're still from our yearly low, $26 from going bear. So that's something important to keep in mind. So we're balanced. And then on the daily, I'm calling this a 4-day balance still. Okay? Tuesday is the low of it, 415.12, and Wednesday is the high of it. 20-day moving average keeps moving down. The 50 probably will be touching the 200. Not a very encouraging close. We'll see if they're going to stay in these balances, right? For Monday and Tuesday before the Fed speaks. There's a chance they might. We'll see if they're going to stay inside of them or not. And then we'll see if all hell breaks loose come the Fed on Wednesday, which obviously everybody's expecting a 25-cent rate hike. I think anything more or less, the market's going to really move one way or the other. And then obviously the press conference will be the next major thing that day. Again, thanks for the likes and subscribing. Come check us out at camelbacktrading.org. Enjoy your weekend, and we'll speak prior to the opening on Monday.